Ladies and gentlemen, good day and welcome to the Rushil Decor Limited conference call hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatia from Asian Market Securities Limited. Thank you, and over to you.
Thanks, Myron. A very warm afternoon and welcome all to the Rushil Decor Q4 and FY22 earnings conference call hosted by Asian Market Securities. From the management side, we have Mr. Rushil Decor, Executive Director, Mr. Keyur Gajjar, CEO, and Mr. Hiren Padhya, CFO. I now hand the conference to Mr. Rushil Bhai for his opening remarks, post which we shall open the floor for Q&A. Over to you, Rushil Bhai. Thank you.
Thank you, Karan. Good evening, everyone. Welcome to the Rushil Decor Limited's earnings conference call for the quarter 4 and the full year ended on the March 31st of the financial year 21-22. I would like to begin by expressing my gratitude to you all for taking out the time to join us today. On the call with me today is Mr. Keyur Gajjar, CEO, and Mr. Hiren Padhya, CFO, and Bridge IR, our investor relation team. Let me start with a brief overview about the Rushil Decor Limited. The company was incorporated in 1993 and has been in the industry over 29 years and currently having the 4th generation involved in the business. We have been mainly focused on the two segments, laminates and MDF. We are one of the largest players in laminate industry and third largest in the MDF boards industry in India. We have laminate manufacturing facility in Gujarat with the annual capacity of 34.92 lakh sheets per annum. We manufacture single-side and double-side decorative sheets and industrial laminates with a wide range of design, colors and finishes. In MDF segment, our Karnataka facility has an annual capacity of 90,000 cubic meters per annum and Andhra Pradesh plant has a capacity of 2,40,000 cubic meters per annum. As you all are aware that Karnataka plant had a major shutdown in quarter 3. The plant has been running now and at the optimum capacity and achieved 105% utilization in the quarter 4 of the financial year 22. With regards to the AP plant, with every passing month the utilization has been gradually growing and we achieved the utilization of nearly 70% in Q4 financial year 2022. Andhra Pradesh facility has added a strategic location advantage. We have already built a strong position in South India market and now we plan to expand pan-India. After the commencement of the production from this plant, we have started ramping up our exports of MDF board also. The MDF volume for the financial year 22 has increased by over 127%. During the year, our strategy was to build our value-added portfolio in MDF segment. We have been successful in this and this is evident from the fact the value-added products contributed 31% of the overall revenue of the MDF boards in the terms of value in the financial year 22. And 32% during the quarter 4 financial year 22. At the same time, we have also built on our laminate portfolio stronger with 1200 plus designs or SKUs. During the year, we have also concentrated on increasing our sales by marketing network with a multi-pronged strategy. We have significantly increased the number of dealers and distributors. Our presence with OEM space has also strengthened. The number of wheel studios has also increased over 150 during this year. So this is all from an overall business perspective. Now I would request Mr. Keyur Gajjar, our CEO, to take over the call for the recent developments.
Thank you, Mr. Rushil. As evident from the results, the year gone by has been a very important year in the journey of Rushil Decor. We established ourselves as a formidable player in fast-growing MDF market. We were able to ramp up our Andhra Pradesh productions within a target period. We are also able to develop a strong marketing network that is going to be strength for our future growth. At the same time, we also invested in building a team and our employee strength to grow significantly. Now that we have strengthened our position in lucrative Southern India market, we are also equally giving importance to Pan-India market. For this, as stated earlier, we have already developed necessary infrastructures like warehousing, branch, and team. On the product side, value addition is our key focus. We have added several brands in the value-added category like ProMax, Pro Plus, which are now our high-value products in MDF segments, and this will start bearing fruits gradually. We will continue to grow our value-added product portfolio in coming future. Additionally, our strategy is to keep increasing the capacity utilizations for our AP plant, which will bring in additional efficiency. I would like to state that every member of Rushil has been a contributor to the recent developments and growth. This is all from my side. Once again, thank you very much everyone for joining this phone call. I would like to request Mr. Hiren Padhya, our CFO, to take up through the financial performance of the company for the fourth quarter, full year ended 31st March 2022, following which we will be happy to respond to your queries. Thank you very much again.
Good afternoon, everybody. Before starting with the numbers, this particular quarter and year-end results are there. So I would like to focus on to one part, and that is last March 2020-21, we have started this AP plant. MDF plant was there. Now, if you compare this financials year on year or even on a quarterly basis also, then the plant has commissioned and the capex has been put into use in the month of March 2021. So if you compare all the figures, right from revenue, capacity utilization, profitability, any number in terms of financials, I think that will have some impact because it is not a comparable. Because last year only one plant, that was Chikmagalur plant, was operational, and during the last financial year this new plant has come up. So I would like to just request you that whenever you compare figures with the last year, you have to keep in mind that figures are very high compared to last year. But the main reason for high numbers is basically the additional turnover of almost 250 crore which has come up in this particular new plant. And this additional turnover has cascading impact in terms of stock level, debtors, creditors, provisions, all certain numbers are also comparatively increased. So keeping in mind this particular aspect, I'd like to start with the numbers. First, in quarter 4 FY2022, our company achieved net revenue of rupees 195 crore with a year-on-year growth of 97.58%. In the same quarter last year, it was 98.75 crore. Revenue growth has been driven by higher volume sales from MDF segment and better realizations across all segments. Coming to EBITDA, which is 31.58 crore in Q4 FY2022, there's an increase of 190% as compared to rupees 10.88 crore in Q4 FY21. This improvement is on account of better realization, higher capacity utilization, and greater operational efficiency. Our EBITDA margin stood at 16.18% against 11.01% in the same quarter last year. Profit after tax for Q4 is 15.41 crore as compared to 5.19 crore in Q4 FY21. That means growth of almost 200%. The EPS in Q4 has stood at 7.74 rupees as compared to around 4 rupees. Now coming to annual financials, the company achieved net revenues of 624 crore in FY22 with a year-on-year growth of 86%. Last year it was 335 crore. So this is again mainly due to combination of higher volume from MDF segment and better realization across these segments. In annual financial also, EBITDA has increased from 35 crore to almost 74 crore. That means it is an increase of almost 111%. EBITDA margin again stood at 11.85%, year-over-year growth of 142 basis points. Profit after tax for FY 2022 is at 22.8 crore as compared to 13.72 crore in FY 21. EPS is stood at rupees 11.45. Now I would like to request for opening the floor for questions and answers.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Karan Bhatelia. Please go ahead, sir.
Hi, thank you for the opportunity. Sir, just wanted to understand the utilization levels at both the MDF plants for fourth quarter and for the entire year FY22.
Hi, Karan. Sir, our AP utilization was 68.95%, so almost we reached to 70%. And Chikmagalur plant was 105%. And altogether we were almost like 79%.
Right, and for the full year?
Sorry?
And for the full year as well?
Yeah, this is the full year we have almost 80% the same ratio for laminate also.
Right. All right. And also we were planning for introducing the value-added portfolio at the Andhra Pradesh facility. So how are things shaping up there?
See, if we talk about in terms of value, which already Mr. Rushil mentioned, that it has contributed more than 30% in our revenue. And if we talk about Q3 to Q4, in Q3 we sold almost 14% value-added product in terms of volume, which now in Q4 we have reached to 23-24%. So if we talk about our realization, it's almost like 38,000 for value-added product, which was previously like 33,000, 34,000.
Right. And what
that
kind
is
of
almost like 10 to 15% growth in value-added product realization as well.
Right. And last bit on the price hike. So what kind of price hike we've taken in the fourth quarter and for the full year FY22 in the MDF and laminate?
In fourth quarter, we didn't take any price hike for MDF division. However, we take like 5% price hike in laminate division because of the price increase of raw material. And if we talk about altogether financial year, then it's more than 18 to 20% in MDF division for last financial year.
Right, and similar 15-20% for laminate as well?
Yeah, I think around 15% to 20% in MDF laminate division as well.
Yes, thank you. That is from my end. I'll return in the.
Thank you very much, Mr. Karan.
Thank you. Participants who wish to ask a question may press star and one on the touchtone telephone. We have the next question from the line of Manan Shah from Moneybee Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, our capacity on a quarterly basis translates into around 82,500 CBM, and the reported sales volume is around 53,000, which translates into around 65% utilization. However, we mentioned Q4 utilization to be around 79%. So can you just help me understand the disconnect?
What I said is 80% is our production that we produced in last quarter, around 64,953 CBM.
Okay.
And there is always certain inventories, like for example, exports. Now we export somewhere in end of December or end of March. However, the BL will come in the month of April, and according to accounting law, we have to book that sales in this quarter only.
Right. Got it. Sir, and in Q3, I believe we had a one-time maintenance expense of around 5 to 6 crores. And then when I look at the other expense on a quarter-on-quarter basis, there is a further increase in the expense by around 5 crores. So, are there any one-offs that are there in the current quarter, or if you can just mention that?
Yes. Actually, as you said, in the quarter 3, we had taken that expense. Now, the whole exercise was completed, but then a couple of things which was pending, and though production has started in Q4, but around a couple of crores, in terms of value, it would be around 1 crore or one odd crore, that was pending in terms of stores-related cost. That was one-time cost, and that has affected. And secondly, as Kiyubai mentioned, last moment container crisis was there. In case of such export, that has also affected the margin directly or indirectly. And the third part, which is related to, again, an exceptional item, and it is a one-time, which is related to sales. Now, we have incentive schemes which was committed in the earlier time, at the time considering the target achievements by the customers. Now, this again has accrued in the quarter 4, which has been accounted for. So, considering this all 3 items, which was one-time item, and we are very sure that this will not continue in the coming quarters. So far as the scheme is concerned, management has internally already discussed and decided that I think such scheme may not be continued in the coming quarters. Rather than giving directly, we may be addressing the same thing in the pricing part. So, because of these 3 things, this impact has come.
And also, I would like to add here that that was going on from the locations where we are located, because of which we are also affected in terms of stocks.
Mm-hmm. Okay. And sir, can you give the volume and the value mix between the 2 plants for the MDF segment?
So you mean to say production volume, right?
The sales volume and the sales value for the MDF between the 2 plants for the quarter and the year.
Okay, for the quarter 4, we sold around 19,875 CBM.
Okay.
And from AP plant, we sold around 33,853 CBM. So altogether, we sold 53,728 CBM.
Okay.
If we compared it with the Q3 22, it was around 47,081. So almost like 15% growth in our volume sales.
Right. And what would this be for Q4 for the year?
Say it again.
For the full year, the same difference, same bifurcation.
I would say 134,921 and 68,461. So altogether 203.
Okay. And similarly for the value mix?
Sorry?
The value mix, the sales mix?
Sales mix, I need to check one second.
Okay. And lastly, on the value added, what are we targeting the value added volume for FY23? So we've already achieved 23-24% in Q4, which we were earlier targeting for FY23. So what are we targeting for on the value add side volume for the coming year? Thank you.
Yeah, we are for coming year, we actually I am very optimistic about reaching between 40 to 50%.
We would be doing any capex for this?
No, not exactly. We have enough capacity for pre-lamination MDF production, and we do, and I think for HDF and exterior gate, we really don't need to have any capex. We can use it our existing technology. It's for the same for everyone.
Okay, and if you can just lastly throw some light on the demand side, looking at the current inflationary scenario, how is the demand shaping up for the MDF segment?
Gentlemen, I can say only that, previous financial year we used to have capacity of 90,000 CBM only. And this year we have sold almost 100,000 plus CBM from AP plant. So we have all our selling part. So we are quite optimistic about selling this product with our, CAGR between 15 to 20%.
So what sort of volumes are we targeting for next year in the MDF segment?
We are targeting, we have two priorities. First priority is to reach our AP plant at 75%. And we are going to use our Chikmagalur plant almost like 95 to 100%, provided there is no unwanted shutdown.
Okay, I'll come back in the queue.
No problem.
Thank you. We have the next question from the line of Amit Agrawal from Burman Capital. Please go ahead.
Hi, thank you for taking my question. First is around the demand trend short term. If you can speak about how was the demand in April and May month so far?
Yeah, demand is quite stable. I would say that in the month of January, after say 15 January, there was a lot of festival season in India, Ugadi and Onam and Uttarayan and all this, Lori and all these things. And then COVID-3 started growing. And February was a bit dull. Then March has regained its momentum. And April looks good too.
Got it. And in terms of monthly trend, would April, May be higher than, like, say, Q4 run rate on month-on-month basis?
It's very premature to say about this quarter, but yeah, because we see that demand is quite good now.
Got it. And sir, in terms of our raw material, how are the timber prices holding up? Are we seeing any challenges from wooden price increases?
Yeah, as of now, there is no challenge in the wooden prices. The prices of the wood are stable. And also would like to add that the few of the raw material, the prices have also started going down. So we may see a good trend in coming quarter.
Got it, sir. And in terms of our realization with respect to other players in the similar market, for example, Green Panel and others, what would be the difference in terms of realization currently?
See, I would say that if you see our Chikmagalur realizations, it is almost like 31,000 plus.
Right.
So we are pretty close to that industry realization. As we said that in Andhra Pradesh, we have just started offering the product mix like value-added products, and we have exports and other activities. That's one of the reasons why our AP realization is comparatively low. But if we talk about our AP realizations compared to last Q3, we have grown 9%.
9%. Got it, sir. And in terms of...
yeah, if we talk about Chikmagalur average realization, we have grown almost 12%.
Got it.
And altogether, our Q3 to Q4 from 24,037 to 27,410. So it's almost like 14 to 15% growth in our realizations compared, and also our volume is also 15% in grown.
Got it, sir. And in terms of export demand, how are we looking at the export demand? In terms of April, May, again, are we seeing continuous inflow of orders?
Yeah, positively, yes. We have gotten good orders for the month of April and May.
So theoretically, it should not be problem for us to operate at the full capacity, right? If the export of orders are there.
No, not at all. Actually, in fact, we can operate at any capacity because this plant retired at 100%, but we can go beyond that also.
And in terms of prices, again, is there any improvement in terms of prices in the export market?
Yes.
And
and I would say our export realization last quarter was 19,758. And this quarter is almost like 21,295. So we have grown almost 7 to 8%.
So it would make sense for us to make it, right? Because it would be contribution positive, especially with the export incentive that we would have.
Yes, and then you can always think of marginal costing also, that, if you have a surplus capacity or something which you can export, because, the finance cycle is pretty fast in exports as well. And they have always like a very good product mix, like their order is always in a one thickness, two thickness. So, just make it and ship it, that's all.
Got it. And the last question from my side, in terms of the capacity that is expected to come from our competition, are we seeing any risk in terms of volume, or do you think there can be potentially a case where we would need to operate at lower utilization?
Sir, what I suggest is, major business is in southern region where we are really doing well. And we see only one capacity in this financial year, I believe. So we really don't see much because, there is again growth in industry as well. Few years back, import used to be like 70, 60, 70%. Now it's less than 10%.
And the one capacity that you mentioned is, I'm assuming, is the Century one you're talking about.
Yes. And also, I think in previous call, the gentleman asked about my 21-22 sales in terms of CBM. From CKM, Chikmagalur, we have sold almost 64,000 CBM, and from Andhra Pradesh, we have sold 110,000 CBM. So altogether, it was 175,000 CBM.
Got it, sir. Perfect. Those were the questions I had. Thank you so much.
Thank you very much.
Thank you. We have the next question from the line of Agastya Dave from CAO Capital. Please go ahead.
Am I audible?
Yes.
Yes, you are.
Thank you for the opportunity, sir. Congratulations. Absolutely great performance. Sir, most of my questions you have already answered. So just one question on the inflation part. You mentioned that some of the raw material prices have started coming down. So can you elaborate that point a bit further? What kind of inflation you saw for the quarter? What kind of inflation you saw for the year? And which raw materials are coming off? Is resin coming off more, or the other stuff is coming down more? What are you seeing on the inflation side? And then, given the strong demand, if the raw material prices come down, how much of it will you actually, you and the industry will actually end up passing? And how much of the additional margins can you retain?
Actually, raw material is more of stable as of date. It's not inflated anymore.
Okay, so can you elaborate a bit more? What has seen the maximum inflation?
If you see today's position, we are almost contributing 55% cost in wood and 45% cost in chemicals.
Right.
And you know what is the situations of crude and other situations. So these are the best price we are having right now. And we really don't see much of that, increase in coming quarters.
Right.
So I don't see much of a change in raw material price, or there may be some decrease. Now, when it comes to the pass on to the customer, it depends on several other factors, like we have to see what is the cost of imports. We have to see what is the demand, and considering all the aspects, accordingly we have to act for the pricings.
In terms of power and fuel, are you facing any challenges there in terms of availability of power?
Can you speak a little louder, gentlemen?
Sir, is there any problem you're facing on the power side in terms of availability or costs?
No, actually we are not facing any kind of a problem because of the power shortage as of now. We are buying it from the from the private exchange, and we are optimizing our production at the best possible way.
Amazing. Thank you very much, sir. All the best to you.
Thank you. We have the next question from the line of Devendra Singhal from Kotak AMC. Please go ahead.
Yeah, hi. Thank you for the question. Sir, you basically mentioned that you had seen a volume growth quarter-on-quarter, which is to the tune of double digit, and you also mentioned that your realizations are moving up. Now, if we then look at the margins in this quarter, you know, it looks like pretty less. While you did mention a few one-offs which are being there, my request would be if you could elaborate the quantum of these one-off expenses, and why do you think the margins don't have a bigger upside than what it has been with other players. And if you look at the peers also, I mean, the bulk of the realizations have actually gone in and flown to the bottom line, which is not the case with us. Your thoughts on this, please?
See, I think as you said, overall margin-wise, I think you are saying little decrease, or you are saying that it is compared to the peers, it is lesser?
Yeah, I mean, your realizations are comparable and not very different, barring a 10-15% differential. But QOQ, you have seen your realization moving up. Whereas the extent of margin increase which we have seen in the company's result, QOQ, is not to that extent. Can you please share your thoughts on that as to what exactly hampered this quarter's numbers and what can we expect going forward? Can it be comparable to the industry players?
Okay. I think as mentioned earlier in the talk also, so far as Chikmagalur is concerned, I had already mentioned a couple of things which was exceptional items that has affected the margin, but I think we are very sure that this will not come up in the next quarter. So far as the AP plant is concerned, as informed by QB also, this plant is a new plant and we are in the process of improving. So if you see quarter by quarter, the realization and everything is improving. We are also in the process of adding the capacity, and along with that, our focus would be to have better realization in terms of value addition. So we have been doing the same thing for the last couple of quarters, and way forward also, our focus would be to add more items in terms of value addition, and maybe the ratio which is there as of now, which will definitely increase in terms of overall quantity. So that will again improve the overall margin. But that in terms of Chikmagalur, it is a one-off item, and in terms of AP, we are committed for better realization in terms of every quarter.
So Chikmagalur, can you give us the quantum of the one-off which was being there in this quarter?
Quantum in terms of value, I think?
Yeah, the total one-off items, you said 3 items were there in this quarter, which would not be getting repeated. Can you tell us the total amount?
It is crore rupees, but not very high.
Sorry, how much?
Single digit crore. In terms of crore, it is single digit, higher single digit.
Higher single digit.
Couple of things.
Okay. And sir, you also mentioned that your value added is increasing quarter on quarter. Still, it is not leading to a bigger margin jump. So can we expect, and your utilization also are improving. So as and when you reach 75, do you think that your margins can actually jump in 20s and not in early teens?
I would like to answer this question. So if we talk about the value-added product, currently we are almost like 45 to 50% value addition product we are supplying from Chikmagalur.
Okay.
And if we talk about Andhra Pradesh, it is very negligible. However, we have grown 5% from last quarter to this quarter. So in coming months, quarters, we have pretty good chances to improve this value-added MDF sales from AP segment. And we, 75% capacity, that's our core objective, and that's not a problem. However, we want to also, we are also equally focusing on, achieving these targets for value addition sales also. And, once we will reach to that part, definitely our things will be changed.
So, if I put it in very good context, our competitors whose numbers are also being available in a public domain, their numbers in terms of margins are in mid-30s. Now, whereas we are currently in around early 20s if I take a deposition therein. Now, I do understand that we have been ramping up our value add and our utilizations, but where do you think our margin differential would settle over the course of this year? If you could help that, that would be really great.
Look, if we talk about our Chikmagalur realization, it is around 31,784. Okay? And if we see the product mix, it's a 50% almost. And when it comes to Andhra Pradesh, I would say it's 95%. And our realization is around average 24,800 something. So definitely it will jump up. If I talk about my value-added realizations from Andhra Pradesh, it is a 38,300 rupees.
Sure, sir. Thank you. Wish you all the best, sir.
Thank you very much.
Thank you. We have the next question from the line of Sneha Talreja from Edelweiss Securities. Please go ahead. We no longer have Sneha on the line. We'll go to the next question. We have the next question from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Congratulations on a good set of numbers. So I just wanted to understand, going forward in Q4, going forward in FY23, will we see numbers and margins similar to Q4? Will that be the perfect comparable, or how much growth can we expect in FY23 in terms of revenue and margins?
I think this was already discussed in the earlier questions. I would just reiterate the same thing. We are not just struggling for profit actually. If you see our numbers compared to last quarter also, as suggested by Kiyul, the realization is already increasing quarter by quarter. So I would rather say that on a conservative side also, we will not only keeping this number, but will definitely have some improvement in the numbers in terms of profitability and revenue both.
Okay, thank you. That's it. All the best.
Thank you.
Thank you. We have the next question from the line of Bajrang Bafna from Sunidhi Securities. Please go ahead.
Congratulations for a good set of numbers. My first question pertains to, I think I missed that, what is the capacity utilization that you are guiding for AP plant for MDF in FY23?
We are planning almost 75% plus.
Okay, and if I get it right, you are saying that in 23 the value-added products proportion will move up to almost 40 to 50% on an overall basis, putting both plants together. So, right now, our EBITDA per CBM, is working out close to 5,000 rupees per CBM in, the Q4. Can we work with, since, this will result into, if everything being the same, even if you don't take any price hike, the proportion should go to almost 30 to 31,000 rupees per CBM, just by assuming that, you start contributing 40 to 50% from the value-added products. So can we work with this 3 to 4,000 rupees additional that you are getting just because of value addition can flow to your EBITDA numbers? Most of it can flow to EBITDA numbers? Maybe can we work with, let's say, to put it
I want to
7,000.
I want to say something that when we produce any value-added product, whether it is a pre-laminated MDF board or exterior grade or HDF grade, the cost of addition is low compared to the realization.
Mm-hmm.
And that's one of the reasons why we are very optimistic about targeting higher, realizations and higher numbers when it comes to the high value products.
So what would be the margin difference to, just to sense from that perspective, Like
it's very difficult because I have to calculate what will be the product mix, how much prelam we will sell, how much HDF we will sell.
No, I am not asking from that perspective. If you sell a simple product without any value addition, and a product when you sell with a value addition, the realizations are almost, let's say, you indicated 38,000 rupees, and without value addition, let's say it is at 24,000 rupees. So when we talk about contribution EBITDA, or the contribution margin, what would be that number, in terms of per CBM in both the cases? Just a ballpark number to work better.
See, I think you have already answered the questions of 24 versus 38. That itself suggests that there's a considerable difference in terms of margin. So I think the initial question which you are saying that 30 to 4,000 additional margin, I think it is possible. So we can even go up to 5,000 also. It is possible.
Okay. Got it. Thank you very much, sir.
Okay, thanks.
Thank you. We have the next question from the line of Rishikesh Bhagat from Kotak Mutual Fund. Please go ahead.
Yeah, good evening. Thank you for the opportunity. So first question is, see, if I look at the entire building wood panel space, and when I speak to the competitors, it is believed that MDF is supposed to be one of the low working capital product, in sense that the working capital deployment is fairly low. Now, if I look at your FY22 performance, when we had the benefit of plant ramp up and large part of incremental profitability coming from MDF, against that, if I look at your cash flow, it has remained negative rather. So how should we reconcile that? What is the reason for this negative cash flow from operation? That is my first question.
Okay. Now, see, I understand. I think the cash flow part, I think you must be knowing that in the initial period of any project where the operations are being stabilized, and compared to last year, this year the suddenly increase in terms of data, creditors, stock also. So I think that will take some time. And the impact of cash flow, which is negative as of now compared to last year, is mainly because of this AP plant. So I think next year you'll have some positive cash flow. That is for sure. And this whole impact was mainly because of working capital changes only. Otherwise, it is positive.
Sir,
next year, I think it will further improve. That is for sure.
If I may add to that, in the sense, if I look at your blended realization and what you commented in the initial part of the call, that your Chikmagalur plant is already at, say, 31,000 realization. And if I look at your blended realization, those are somewhere around 27,000. And obviously, you spoke about export realization being 22,000, somewhere around that. So that effectively means that your AP plant product has largely gone into the export, and that brought your realization down. And in the initial part of the call, you did mention that the export working capital and payment are pretty fast. So then how do we reconcile this negative cash flow from operation?
No. Export is just only 20%. We have supplied around 7 to 8,000 CBM only exports. 7,000 CBM. So it's not that most of the production going to exports. It's a domestic production as well. But as I said, that we are more of selling interior grade products in from our AP plant, and its overall realization is 25,000 around. So that's one of the reasons.
Okay. Thank you.
Thank you. Participants who wish to ask a question may press star and 1 on your touchtone telephone. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Krishna S. from Vihas Advisors. Please go ahead.
Thank you very much for the opportunity. Am I audible?
Yes.
Yeah. So first of all, I would like to congratulate your entire team because, having undertaken a very large capex and having scaled it up to a good level, it's easier said than done. So first of all, congratulations to the entire team from top to bottom, and all the best for the future as well. And most of the questions have been answered by you. So just a couple of questions, further questions. One is on we have always been discussing more on the MDF and MDF more. So but essentially laminates business is also an important business. So why is it that we are not having any strategies or any growth which we are lining up for the laminate part of the business?
Gentlemen, we have certain internal discussions are in process, but we cannot discuss at present. But yes, all these products are our priorities: laminates, MDF, and every product.
Okay. Got it.
Laminate is our pillar, so we cannot ignore it.
Okay. So can we just from this, can we infer that we are always on the lookout for opportunities for growth in terms of even in the laminates business as well?
We always look for an opportunity in panel industry in general. So laminate, MDF, any other products, it could be of our interest. But yes, at present we don't have anything to declare here.
Okay. And similarly, now having ramped up the production at the AP plant, and having come to almost 70% odd capacity utilization. So how are we looking at so now maybe in FY23 we would be reaching a stage where further growth from here would be difficult, in the sense that the capacity would have been utilized and the price rises also would have been taken to a considerable extent. So what is the way forward if we look at the next 5-year strategy?
So if we talk about the capacity utilization of 70% in last financial year, now if you see that the plants of the German state of facilities run at 105%, 110%. So at this financial year, if we are targeting at 75% of utilization, so we have enough capacity with us to play for next 3 years as well.
Okay, got it. Yeah. So that 105%, that means that you can go even above the rated capacity, right?
Perfect. These plants are always designed with upper capacities.
Okay. And one last question, generally we can see an inflation in the economy throughout for all products, general inflation. So how do you feel that you have any sense of whether the inflation can impact the bottom line for the next year, say 22, 23, or you do not have you feel that may not impact the bottom lines much?
No, we really don't see much of the effects of inflation, because during the COVID period also there was a huge increase in price and other products, not only panel in general, but we didn't see any degrowth in demand, and we really don't see that part in our segment at least.
Okay, that's all from my side. So hearty congratulations and good luck for the next financial.
Thank you very much, gentlemen.
Thank you. We have the next from the line of Sneha Talreja from Edelweiss Securities. Please go ahead.
Good evening, sir, and thanks a lot for the opportunity. And sorry for the previous time, my call dropped. Had 2 questions from my end. Firstly, just wanted to understand your working capital requirement has increased a lot. Specifically, want to understand on the receivable days side that what was the reason for such a sharp increase in receivables and inventory, and where do you see sustainable levels? That's first from my end.
Okay, I think as I mentioned in the initial part of my speech, if you compare the working capital figures in absolute terms compared to last year and this year, I think 21 versus 22, the whole plant has been made operational. So naturally, there is an increase in terms of all the working capital component, right from the stock level, debtors, creditors, and even to the extent that expenses part, provisions, everything has increased. Now, if you compare this result with next year result, I think we'll have some apple-to-apple comparison. So this is the impact of additional capacity which has put into use and additional operations which has started. Of course, I think there is a 100% there is scope for improvement in terms of efficiency and other things. So that will take 1 or 2 quarters, but I think next year's figures will be comparable.
Sure. Got that, sir. So secondly, I just wanted to understand, once your plant stabilizes now, what will be your next step? Whether it will be, kind of going for debt payment, or will you be looking for expansion given that the space is, growing at a very fast pace? That's second.
I think you must have known we have got finance from couple of places in terms of foreign currency finance as well as rupee also. So far as foreign currency is concerned, one of the loan is we have got at rate of 0.85%, which is very good rate so far as our company is concerned. So if you see overall cost of finance as of now, if I consider including the working capital part, it comes to around 5 to 6%. So naturally, we would not like to repay as of now in terms of the repayment. The normal term, which is in terms of all the term loan, our normal period is 7 years. So we'll just go by the same terms which has been agreed with the financial institutions. Will not make any hurry in terms of repayment of loan. But yes, I think after review of 1 or 2 quarters, if we can have a better position in terms of cash and other things, we may plan for some repayment, but considering the rate which is available, which is very, very competitive, so we will not go for repayment as of now.
Understood. And the reason for, lastly, and the reason for you guiding 75%, given that, you're already operating at around 70% utilization from EP plant, and plus you're looking at higher value addition also in this particular plant. Any specific reason why you're being constrained with 75% overall utilization next year, and why can't you go further?
Yeah, hi. We actually said that we will use more than 75%. We will try 75% plus. Because as I said, we are trying to focus on value-added product. And when you are producing high density or product compared to medium density, definitely the production speed and everything will be lower down. So considering this part, 800 CBM per day, we have, take this 75% plus target. But
understood.
It doesn't mean that we are going to restrict ourselves for that 75% or any other.
Sure, got that. Thanks and all the best.
Yeah.
Thank you. We have the next question from the line of Pranav Mehta from Equirus Securities. Please go ahead.
Hello. Yeah, thank you for taking a question. Sir, so basically I wanted to understand on how you are planning to, let's say, increase your capacity, whether you are planning to increase your capacity in the laminate business, or are you trying to, let's say, increase your quantum of growth in PVC business, or are you trying for a new addition of any new, let's say, segment over next 1 or 2 years? If you can throw some light on the same.
As of now, we earlier also discussed that we are under the internal discussions of what to do next. So once we are gone through our discussions and we will make the announcement, we can take up the questions in the further quarters.
And sir, since the laminate exports from India are growing quite well, any reason why we are not able to grow?
As we say that if you compare the exports, we are the 4th or 5th largest exporter for India. And as long as the export business is concerned, we are doing more than 100 crore plus business in exports just by the laminates.
And we have added couple of new countries in this financial years. Laminate is something like, they keep the inventory and then reorders and everything will start. So now we have developed couple of new countries, and aggressively we are working on Southeast and Far East market. Also we are working in some of the Eastern Europe market. Some talks going for Russian market because there is a huge demand.
Hello.
Yes.
Yes, sir. And sir, any on MDF side, have you done any tie-up with any, let's say, ready-made furniture maker or someone like that, or OEMs?
Yeah, we are supplying couple of OEMs. Like as earlier I said that we are supplying to products like Live Space and all this furniture, online portals and furniture makers. And second thing, there are so many unorganized OEM. Actually, they are working for online portals. These online portals are not producing material for themselves. They are sourcing from local OEMs. So we are supplying to those OEMs as well. Then we have a couple of big OEMs like Spacewood, Live Space and all these people. They are also buying from us. Because OEM is very equal role in coming days. We cannot ignore OEM business. Furniture industry's growth is totally dependent on OEM. Today we are focusing almost like 30% volume on OEM business, though our realization may be slightly lower, 1% compared to trade, but that's the future.
Okay, sir. And sir, just wanted to understand on the MDF part. So as you said that you are servicing the OEM business. So how are things shaping up for the OEM, let's say on the export business particularly? So they have good orders for exports?
Very honestly, their Indian export is less than 1% if we compare with the world trade. And I think government expecting 10 to 15% growth in this segment. So in coming days, we will see more of OEMs. And if you see, there is a lot of furniture parks like Tuticorin. They are setting up a new furniture park in in Tuticorin, Tamil Nadu. So in coming days, we will see a lot of furniture park. In Madhya Pradesh also, they have some furniture hub or kind of productions going to take place. So in coming days, government is also very keen to focus on furniture exports and furniture productions.
Sure. That's it from my side. Thank you.
Thank you.
Thank you. We have the next question from the line of Pranav Gala from iWealth Management. Please go ahead.
Hello, am I audible?
Yes.
Yeah. So I was seeing on our volume side, so for the last 2-3 quarters, if I average it out, we've not seen any volume growth. We are at around 53,000-54,000 SEM, both capacities combined. So is it that we are seeing a slowdown in the demand side of it for us?
As such, we really don't see demand constraint. If we see Q3 we sold 47,000 CBM.
Correct. That was because of the Chikmagalur plant being shut, right?
Yeah, but in Q4 we reached to 53,000 CBM again.
Right. So exactly. So if I see the last 3 quarters, we've been there at 53 to 54,000 CBM only. I mean, it's a pure 65% utilization, if I would say. So how are we planning to ramp this up? When we are saying that we want to ramp up the production side, last 3 quarters have really been good on the demand side as well, like suggested on the earlier call. So where is the lag here?
See, sir, if we talk about our entire rated capacity per quarter, it comes around 82,500 CBM.
Correct.
And what till date we have reached is 0.7%, but we are trying this year is 0.75. So we are talking of almost like 60,000 CBM cells.
Okay. And also, sir...
And as I said, there are so many untapped markets. So far we have not, entered, like HDF, exterior grade, prelam grade and all these materials. Now we are trying to enter into the other part of the India, like North India, East India.
Right.
I think achieving capacity and selling the capacity will not be an issue.
Okay, got it. And sir, can I have the sales figure for the Andhra Pradesh plant for Q4 FY22?
Sorry, say it again.
I just wanted the sales figure of MDF for Q4 FY22 in Andhra Pradesh.
MDF, no. It's a volume or rupee?
Value, rupee terms, sir.
Rupee terms. It is almost like 84 crore, 98,000, 9,85,000. 84 crore.
Okay, 84 crore. So sir, last previous quarter would be?
Previous quarter was almost same.
Okay, got it. Sir, could you tell me the previous quarter volume as well, sir, in the Andhra Pradesh plant?
The previous quarter was 36,000. Current quarter, this is 33,000.
Okay, thank you, sir. Thank you so much, and all the best.
As I said that in the month of January, we sold highest in terms of MDF. And then in February, we faced the COVID situations, and in March, we regained the momentum.
Okay, and are we continuing to see the momentum now as well?
Yeah, MDF, we don't see any issue.
Okay, sir. Okay. Thank you, sir, and all the best.
Thank you very much.
Thank you. We have the next question from the line of Ravindra Nayak from Sunidhi Securities. Please go ahead.
Thank you for the opportunity, sir. A couple of questions regarding this value-added and non-value-added products in MDF side. Can you please tell me, aggregate?
Can you repeat this question? I'm not able to hear.
Is it audible?
Yeah. Now it's better.
Please come closer to the mic, Mr. Nayak. Your voice is not very much audible on the call.
Is it audible right now?
Yeah.
Hello?
Yes.
Is it audible?
Yes.
So I'm asking this value-added product and non-value-added product on aggregate basis, so that whatever the 1,74,000 we have done sold in this year, FY22. So what is the contribution from value-added and non-value-added percentage terms, and aggregate price of value-added product and non-value-added product for FY22, and what it is going to be in FY23 in terms of percentage terms, and what is the price you are expecting on this value-added non-value-added product. And that is my first question. And the second question regarding this other products, like I have a PVC board and also the laminates. That is up to some extent stagnant. There is a decline in margin from the year to year laminates. And what is the plan? You have mentioned something that we have some plan. Whether we need some capex for this new product, the other products going ahead, that is my second question. And the third question regarding the decline in trade payables. There is a significant decline in the trade payables. So what is the reason for that? That is the third question. And how do you see the import competition from MDF in the current situation?
Gentlemen, can we go question by question, because you are asking too many questions altogether, and we are not able to.
First question regarding the value-added, non-value-added products in aggregate basis, and what you are expecting in FY23.
Okay, so we go with the first question.
So if I talk about the value-added product, as I said that we are almost like 23 to 25% in last financial year. But please understand, in Q1 and Q2, our AP plant was just gearing up.
Okay.
We stabilized in Q3 and Q4 very well compared to Q1 and Q2. And entire supply from AP plant was more or less interior grade and exports.
Okay.
We have reached 5% value addition in the last quarter, and the realization is around 38,000 rupees, which used to be 33,000 plus in Q3.
So you are talking about the value-added products, right?
Yes, I am talking about value-added products.
So it is on a year, entire year basis?
Yes, I am talking about entire year, Q21-22.
Okay. What is the contribution for that, in percentage terms and value-added products in entire 1,74,000?
As I said, we sold almost 24 to 25% of the volume.
Okay, 25% of the volume. Okay.
It was a very negligible sales from AP plant, I would say.
Okay. And rest is, what is the price of the non-value-added products now?
Non-value-added productions, see, if we take the last quarter, it comes around 25,000.
Okay, 25,000. Yearly basis, I'm just asking in a yearly basis.
Yearly basis is no point. The reason is, since last 2 quarters, there was a price increase.
Okay.
Which is still prevailing now.
Okay.
So in Q1 and Q2, there was no much price. The total price hike we took around 18 to 20% in last financial year, especially in third quarter.
Okay. How the sales mix is going to change in FY23?
Definitely, as I said, that our target is to reach 40 to 50%. That's what our target is. We are really working hard on this product mix. At present, it is 23 to 25%.
Okay. So, do you think that the realizations of 38,000 will remain same, or it will go further?
Definitely, it will increase our realizations. Definitely. You can see that in last quarter itself only our realization increased almost 15%.
Okay. Got it. Okay. And sir, regarding the other products view, and how you are saying the PVC board and the laminates, in your plan, whether we require any capex for that for going ahead? Can you please guide something on that?
To be honest, sir, we have really not taken any decision on capex part so far. Okay. Certain internal discussions are on way, but I am not sure when we will be able to inform that part. But yes, we are working very hard on promoting our laminate business in export market, because we feel that export growth is almost 10 to 15%. And we are taking that growth very seriously.
Okay, sir. Regarding the trade payable side, why there is a decline in trade payable in the current in the last financial year, FY22?
So your question is that trade payables has increased or decreased? What exactly you are saying?
It is percentage terms, it is decline. Your turnover is increased, but in a turnover percentage terms, it has declined. So whether it is one-off kind of thing, or it is going to increase further?
So it is basically...
That may be the reason why your working capital is...
No, I understood your question. See, when you are saying compared to last year, payables have decreased. So, yes, it is decreased, but then see, it will stabilize in between. So, this time it has decreased, that is for sure, that is fact also. But next year, it will stabilize.
And second thing, in our MDF part, we have a very good increase of trade receivable also. That cycle is very effective. Previously, it used to be a laminate and Chikmagalur plant. Now, with the AP plant, we have a very good trade receivable cycle also. We receive payment also very fast compared to the other products.
Okay. So see, if you see the overall working capital cycle also, in that case also, we are in the range of around 10 to 12 days. So it is a practically improvement in terms of efficiency of handling the working capital. But I'm saying that once the volume increases, it may increase or decrease by 10-15%, but it will stabilize now.
Okay. And sir, regarding the competition or export from the MDF, what is the situation? Can you please guide something on that?
Sorry, regarding competition for
MDF. Import, sir. Import MDF.
Yeah, again, I would say that another couple of quarters, we really don't see, because this supply chain is really disrupted and freights are still like, if we talk about Vietnam or Indonesia, Vietnam freights are still 1,500, 1,600 per 20 feet a container. And of course, their input cost is also there, and they have a very good realization in domestic market. Demand in local market like Vietnam, Indonesia is also there, because a lot of US and European furniture importers are replacing furniture with China. So we don't see much, because it's less than even 10%. It's very negligible now.
Okay. Thank you very much, sir.
My pleasure. Thank you very much.
Thank you. Participants are requested to kindly restrict your question to 2 questions per participant. Participants are requested to kindly restrict your question to 2 questions per participant. We have the next question from the line of Jyoti Shah from Molecule Ventures. Please go ahead.
Hi, sir. Congratulations on a very good set of numbers. Sir, my question is regarding the sustainability of your realization. So lately I've observed every company in the MDF industry has been giving out really good sales numbers because of realization being very strong for the last couple of quarters. So I just wanted to get a sense on how sustainable are these realizations, given that right now we are basically benefited from the lesser imports coming into our country. So when the imports eventually start coming again, and the realizations might go down. So what's your take on the sustainability part?
To be honest, we really don't know about the import situations, because it has been 2 years, because we are exporting laminate as well. We are exporting MDF as well. And we really don't see the change in freight. I mean, freight is just, either same or they increase. And second part is availability of container. MDF is a commodity. You cannot import 1 or 2 containers. You need 50 or 100 containers. So we really don't see, and as long as demand supply is concerned, we see the realizations and pricings and everything will remain stable for some quarters.
All right. Thank you so much. That's it.
Thank you.
Thank you. We have the next question on the line of Manish Singh from Synergy Partners. Please go ahead.
Hello.
Yes, please.
So thank you, sir. My questions are answered. Thank you so much for taking up.
Thank you.
Thank you. We have the next question from the line of Sachin Pandya, an individual investor. Please go ahead.
Good afternoon, sir. Thank you for the opportunity and congratulations on great set of numbers.
Thank you.
Yeah. So I want to ask you about the right issue that during the quarter ended March 31, 2022, the company has demanded the balance outstanding call money from the shareholders, for which the payment period was March 14 to April 11, 2022. I just want to ask you about that money. Has we do we received that money?
Received money or not?
Yeah. Actually, total cost pending on total 8,847 sales. Out of that, company has received on balance call for 6,665 sales. So I think nearly 2,000 sales calls are pending. So for 6,665 sales, company has received full money or balance call money.
Okay, sir. Thank you, sir.
Thank you.
Thank you. We have the next question on the line of Govind Raj, an investor. Please go ahead.
Sir, congrats for a good set of numbers. Sir, with regard to the realization, in Q4 we had 27,410 per cubic meter, and in Q3 it was 23,622. Whereas our competitor, Greenfly, is getting a realization of 33,320. Why so much of difference is there, sir?
So if I'm not mistaken, your question is about the realizations. Why our realization is less? As I said that our Chikmagalur mix is 50% almost, and over there our realization is 31,000 plus. But as we said that our Q3, as our AP plant regularized in the Q3 and Q4 only. Q1, Q2, of course, we were there only. But now, we are focusing to supply more of a value-added product from AP plant. And this will definitely increase our realizations.
Okay, what was the mix in Q4 with regard to the...
If I say about my AP plant, we have just 5% of value-added and 95% is regular. In Q3, it was almost 1%.
Okay. And how would it be ramped up, sir, suppose by March of 23?
Oh, definitely said. Today, if we talk about our total contribution is almost 23 to 25% value added from the both plant, and we want to take it to 40 to 50%.
Okay, sir. And one last question, sir. I think we have only two bigger plants in South India. That is, one is Greenfield and one is ours. And what will be the geographical mix of sales, sir? For example, how much of the sales is happening in South as well as how much is happening to the North or East or West?
If we talk about the North market, the demand is almost 25 to 30%. If we talk about East and West market together, it is again 25 to 30%, and South market is between 40 to 50%. At present, there are two main organized players, Green Panel and Rushil Decor. And there is another player called Parallel.
Okay, sir. Only three players in South India.
Yeah.
Okay, sir. And with regard to that one...
Mr. Raj, we request you to kindly come back in the queue for follow-up.
Yeah, okay. Okay.
Thank you. We have the next question from the line of Nirvana, an individual investor. Please go ahead.
Yeah, hi. Thank you so much for giving me the opportunity. My question, sir, is regarding the capital structure of the company. So right now, the debt to equity is around, I think, 1.46, and the annual EBITDA coverage ratio, I think, is less than 4. So my question is, I already heard you saying that because the interest rates are comfortable, you will take your time to pay down the loans. But I think, if I'm not wrong, a lot of the debt is secured debt, which is tied to your receivables or your assets. So that might be interpreted as risky by the market. So how do you see that, and what is your target capital structure going forward?
See, I think what you said is correct. As of now, the debt equity ratio is around 1.4 odd. Now, see, issue is like we have already had this term loan, etc. We also have working capital facilities. Now, just to repay, it will take some time. And given the current position and the way we are planning, I think after 1 year, maybe after a couple of quarters, we'll have a better understanding in terms of cash accrual, etc. At that time, we can take a call for prepayment of loan. But as of now, as I said earlier, we are continuing with this thing only. Now, so far as your probable capital structure in the future, I think it would be too early to say. So I would simply say that for next couple of quarters, I think it will remain same, and we will just repay the term loan as per the scheduled payment.
Okay. Sir, what percentage of our term loans, I think we have around 280 odd term loans. What percentage of them are secured loans, if you can give that figure?
See, practically, whatever loan we have, out of this, so far, I think the term loan is concerned, it is 100% secured only. And we have got financial institutions, we have a couple of financial institutions in terms of various banks. And we also have a combination of INR and the foreign currency also. So it is 100% secured.
Right. Okay. And you are comfortable with it to continue and decide on the capital structure after a couple more quarters?
Yes, exactly. It will be too early to say as of now.
Okay. And last question from my side. Why is the interest expense for this quarter suddenly 3 crores? It was 6 crores for the last 3 quarters. And that hasn't come down. So.
Actually, there are a couple of things. One is, you are comparing with third quarter versus fourth quarter, right?
No, even first, second, and third quarter, you have paid 6 crores of interest every quarter, if I'm not wrong.
Yes, I think if you can see third versus fourth quarter, there is a decrease in terms of interest cost. This is basically, we got rate reduction in terms of finance cost from the bank in various cases. Now the reduction was effective from October some date, but then the intimation had come from the bank, which was received in the fourth quarter. So in the current quarter, that is quarter 4, we are given impact of that interest reduction for the 2 quarters. Similarly, there is an export benefit in terms of EPC facility. That subvention benefit was given to us, and this was related to the whole financial year, but again it was pending from RBI side. So though RBI has given an intimation for giving this benefit, this effect from I think 1st of October, but again, as per the normal process in the banks, they got final inspection in the bank in the fourth quarter only. So again, here also we got total benefit of 2 quarters, which we have taken impact in the same quarter only. That is the two main aspect. But I think way forward, I can tell you that maybe it will remain in the range of maybe 5 crore odd. So it will normalize in the coming quarters. It is a one-off impact in this particular quarter.
Okay. Thanks for answering my question. That's all. Thank you.
Thank you. I would now like to hand the conference over to Mr. Karan Bhatelia for closing comments, please.
Hi. Thank you for the detailed answers. Sir, any closing comments that you want to make?
Yeah.
Yes, please. Go ahead.
Yeah, I would thank the entire team of Rushil Decor for their untiring efforts, hard work, sincerity, and high dedication. Also, I appreciate all of you for the participating in the conference call, and do get in touch with our IR team for any other questions.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.